SEBI could soon clip the wings of Finfluencers even further. Sources tell us mutual funds and other financial service providers may have to limit the services of Finfluencers. Little doubt that the democratization of India's financial markets has spawned a plethora of online influencers, many of whom may have dubious intentions. Let's just cut to the chase. It's snazzy online content influencing your investment decisions. If that's the case, then you could have been finfluenced into making decisions which you may not otherwise. And that's why the market regulator is now ready to crack the whip. Before we take this up with our speakers for tonight, my colleague Kavita Thapliyal is joining with all the details.
The market regulator SEBI is expected to come up with guidelines where direct brokers or mutual fund distributors or traders registered with SEBI will have to limit the use of social media of influencers. We've been seeing SEBI's crackdown on social media influencers because SEBI fears the amount of misleading information that's passing on to the retail investors to which they are falling prey or becoming a victim of, and we've seen this on a rise since the pandemic. So earlier there have been guidelines where SEBI has clearly defined and stated ways of communication to be used by IRAs or even research analysts. End of last year, we had seen the definition of celebrities that can be used or should not be used by mutual fund houses in order to promote their products or for advertising or marketing purpose. Clearly, if we talk about the celebrity definition given or issued by SEBI last year to mutual fund houses and traders and distributors was that any person who has a following of more than 10 lakhs should not be used by mutual fund houses. Now, going one step ahead, SEBI is expected to come up with a directive plan, a guideline where a limited use in whatever conditions will be defined clearly to mutual fund houses, distributors, to traders or traders registered with SEBI especially, and what kind of information they are allowed to give. SEBI actually fears the kind of misleading information. The social media influencers directly don't come under SEBI's jurisdiction, but then what SEBI can actually do is legitimize the kind of association a registered entity will be having with social media influencers, and that is what SEBI is trying to work on. So very soon we might hear a guideline where the limited use of financial influencers in advertising and marketing campaign, which is done by mutual fund houses, distributors or research analysts can be issued.
Thanks for that, Kavita. I'm joined now by Dhirendra Kumar, CEO of Value Research, and PV Subramaniam, CEO of Subramani.com. Welcome to both of you, and thank you so much for speaking with us this evening on ET Now. Mr. Kumar, let me begin with you. Do you think that a crackdown on this category of advisors online called Finfluencers is necessary? Is it important, and how do you define who comes in under this specific category?
Well, I think it's important to actually make the whole thing transparent. And I think beyond a point, it can't be done because influencers, they have become very influential simply because of the technology enablement and the way the media has been democratized and everybody can be a media person. And there are influential people simply because they know how to reach out to a larger audience and build a following, but they may not be competent enough to provide advice. But in the short run, they might build a follower and it could be misleading if they are actually up to giving advice. And I think, it's difficult for SEBI to regulate because something will leave a trail, but many things will not leave a trail. It can happen in your own vicinity. It can happen in your own surrounding, and it may not leave such a thing, and they are not regulated entities. So I think it can only be regulated indirectly through the financial services industry, the component which is regulated, all the brokers, asset managers, investment analysts, research analysts, that they have to disclose their relationship with them. And the moment it is made, I think things will become transparent, clearer, and that's about it. That's all that can be done.
SEBI has limited powers. My question is, and we need to look at this as well. Let me come to PV Subramaniam on this. Why have Finfluencers grown so largely in their scope and, frankly, their influence? on investors. I mean, you have experts who've been there for ages. I have two of them on screen with me right now. You have well-known institutions with brand names. What is the draw that finfluencers are bringing? And is it important to first identify the source of that to tackle this issue?
Yeah, it's very important because see, a finfluencer, anybody can become a finfluencer. All you need
Right.
to do is be there and create good content. By good content, I mean when you do a title like top 10 shares to buy or top 5 funds to invest, it attracts more than a dull headline saying why you should make a will. So somebody who knows SEO, somebody who knows all the marketing gimmicks, knows how to create that, and they soon become 1 million kind of a thing, and then they are able to create an influence, and they are able to talk in a language which is aimed at the 22-year-old. Like I mean, Dhiren and I are in the 50 plus age group. Maybe we are not able to attract that kind of a talent or that kind of an audience, and maybe these people can. So somewhere we have to admit that I can't get 10 million people to follow me. Maybe I can get 50,000, and that's not being an influencer. So what attracts them is younger people want no judgment. Just say, okay, buy Asian Paints or buy things like that, without saying first, have you got a term insurance? Do you take medical insurance? They don't want to hear. They don't. I mean, there are people who come to me and say, you sound like my dad, right? So they don't want that. They want somebody who will not be judgmental, who will say, okay, buy this share. And we understand that they have no responsibility. And these are echo chambers, right? You keep on saying buy Asian Paints for 3 years, 4 years, kabhi to sahi hoga. And most of these people don't even calculate what kind of returns they get. So you can be a influencer for very long before people find out that, well, you don't have much stuff.
Plus, there is no guarantee you're giving. There is no responsibility you have for the advice you're giving. But you know, it's not as benign as that. I think we need to identify what the concern is. It's not someone saying, I think this is a good investment, and then do your research and figure it out. It's people promising obscene returns, people promising the kind of money that doesn't make sense. And those who are watching not realizing that if it's too good to be true, it's probably not true. We had a pump and dump scheme on YouTube that SEBI cracked down on recently, and that's just the tip of the iceberg, isn't it? Dhirendra Kumar, my question is, how will the regulator, the brokerage firm, the mutual fund firm, or even the viewer in this case, sift out and separate someone who knows their stuff from someone who is in it to fool you into investing into a certain stock or a certain instrument just to push up the prices?
Very difficult. Because what PV said just now, I was not able to articulate it so well, which is, these guys are smart. They know how to attract people. They are able to strike a great chord with youngsters, and they don't have any accountability. So many a times it has become transparent. What happened in the crypto times? Every time I have written a column in Economic Times on cryptocurrency, underneath the column, I will get hundreds of abusers, and all the influencers who actually talked about, praised about, and maybe they had a malafide, there was a conflict of interest. They were taking money from some of these crypto companies, the exchanges, and they were promoting some of which went bankrupt, some of which just simply disappeared, vaporized after that. And the Luna was one case, and few others. And some of these influencers, they just changed track. They were on, and I think not much can be done about it unless there is a greater awareness. And it is good that people, everybody learns his own way. I would say that in our times, in my early days, the great Indian scam happened. People bought all kind of IPOs in early 90s, and then they lost money, and some of it they were left with, and which worked. And so I think it's far easier said that people need to be informed, they need to be regulated, and somebody needs to catch them. But the basic thing is that this is downright fraud. Somebody is misleading a large number of people simply because now they are enabled by technology to build a following, and they have no answerability. They are not accountable, and investors will be left high and dry. But this is nothing new.
My question is that what should SEBI's role be? Let me come to Mr. Subramaniam over here. And what should the role of proper institutions be? The specific story we're talking about today is well-known institutions piggybacking on the popularity of these finfluencers. It's like a brand endorsement, right? You find people to endorse your brand. It used to be celebrities. But instead of having random celebrities who have nothing to do with finance, they're deciding to use these finfluencers who have a following. And frankly, influencers have become brand ambassadors in all fields. So what do you think should be the curb, if any, or the criteria, if any, on the brokerages and the mutual fund companies who want to rope in these finfluencers?
See, one thing which SEBI can do is to say all the mutual funds, brokerage houses, etc., whoever use any media agency or influencer should disclose every month how much is the money that they are spending there. So at least you will know that XYZ who claims that there is no influence on him is being paid 1 lakh by a mutual fund or 1 crore by a mutual fund, whatever. At least people will know. Today, if I talk about a product, you don't even know whether it is paid or not paid, right? You cannot make out. Some of them say this is paid, and some of them might just keep the product. I could wear a T-shirt wearing that product, right? Any of those things, you will not even know. So first of all, the full disclosure by the fund houses and brokerage houses. They are the big users, right? Insurance companies. These guys, when they start disclosing, people will say, "Oh, ये influencer पैसा लेता है क्या? हमको मालूम नहीं था." So from there, you will start demolishing some of the guys who pretend that they don't take money. They will be caught out. Then there are others. You have to do it very slowly, but also understand one thing, Tamanna: greed and lack of understanding. This has been very old, right from the 17th century. Greed has been a big thing. How will you conquer that? If somebody comes and tells you, I'll give you 6% interest per month or 4% interest per month, you have to understand it can't happen. So if somebody comes out and says this mutual fund is better than that mutual fund or things like that, you have to understand that maybe this person doesn't even have much understanding about mutual fund. So finding that out and rating, ultimately people have to do it themselves. There is a limit to what a regulator like SEBI or IRDA can do. Normally they will wake up only after the event has happened. Like there is these are echo chambers, right? If so 1,000 people start buying Asian Paints every day or ITC every day, that's fantastic. But what if they start buying a share like Deccan Gold, and when suddenly they dump it and go, you will not know where to look. If it's a big company, it's still okay. So you should
Are you saying
ban.
the responsibility lies with the investor?
It's always been like that, Tamanna.
And not with the regulator?
Nobody else can save you. What do you expect? I mean, the regulator can make rules, but if your greed does not controlled, you will lose money. I mean, there is no denying that. It's a 3,000-year-old problem. Same thing, greed.
Okay.
So somebody is greed saying, oh, 60% return मिलेगा. नहीं मिलता है boss. इतना आसान होता तो हम लोग नहीं करते क्या?
All right. Dhirendra, any closing comments before I wrap this? I mean, it seems a little extreme to put everything on the investor. It's like saying that if someone mugs you, it's your fault, not the cop's problem.
No, I can create a rule saying.
Dhirendra on this, yes.
Yeah, okay. Sorry.
No, the investor is choosing to listen to what you want to. Yeah. And I think, there is absolutely no substitute to developing some basic understanding. And, I think, for every investor, the basic rule which everybody should follow is that you have to start with the assumption that somebody is trying to fool you. Somebody is trying to, and then you have to get rational, get a logic, get an explanation that it is not true. And if you have this attitude towards financial services, I think it will work very nicely.
Thank you so much, Dhirendra Kumar and PV Subramaniam, for joining us. These are the OGs. On your screen, the people who've been giving advice for, I think, 2 decades plus. And do your own due diligence. I'm not saying there's anything wrong with a younger or snazzy way of presentation, but do your due diligence before you listen to anyone's advice, and that should be a standard. Well, let's